Best friends, Market Sniper here, giving you an update. And as we've said with the dollar index, we've done quite a bit of coverage on that recently. The dollar is regaining its zest. There's two key crisis points of Western-friendly nations. That is Asia and Eurozone, EU particularly, which of course will also include the pound as part of that in the mix. So there is a euro failure, and more specific, of greater interest almost to me, because of my sentiment with regards to the deep malaise China truly is in, that you are not hearing the fullness about, is the Asian crisis, for which Japan itself has already shown that it's going to do immense protection of the Japanese yen. My apologies, of the Japanese debt market at the expense of the yen. Let me restate that. So the USD JPY is totally expendable and has been one of the biggest. But the Asian crisis is not just around the Hong Kong dollar peg, which involves China and the likelihood that the yuan might also shift a little bit. But the main interesting pairs are the yen itself, the Korean won, and the Hong Kong peg for me. Those are my three big calls for the larger Asia FX crisis, which will come as a result of aggressive federal behavior, almost guaranteed to cause, if we're not already there, in fact we are in a recession. And I will highlight something I think I retweeted just now, actually, that 10 out of the 13, so let's just go to profile, 10 of the last tightening cycles out of the last 13 led to the major recessions. So here you go. There's only 3 in 67, long ago in 95 and 83. You literally haven't got a modern era tightening cycle that hasn't led to recessions. And can I also say, when we talk about recessions, we're already in a recession, but we don't do normal recessions. We do bed-wetting, crap the bed and puking. We do the whole Monty splurge, and it's ugly. It gets ugly. And as another point here, if you look at this runaway nature of inflation, you have not had an inflation spell. This was a moderate. This is, by comparison, this little period of inflationary rise there that had a tightening element in it there, and this little period here for that tightening spell, and this overall entire period, let's give it the entire decade from 97 to 2007, it's a minor league. This move in inflation is another level of move. It takes you back to what went on in the 60s in the run-up to the double-digit inflations that led to the gold, silver, precious metals absolute boom. So this was all negative real interest rates. What does that mean? It means the rates that you're getting on bonds and debt is lower than the actual official, note the official lie, with all the shrinkflation and all the minimizing techniques and lies and deceptions, statistics. You get lies, damn lies, and statistics that is going on currently. But even against the official stats, the payment on yield, and we'll take a look at yield on this, because this entire negative interest rate period is to try allow the debt market to shrink in an orderly fashion. So this is the worst time to be bonds, hence my big war against those that say buy bonds, wear diamonds, etc., etc., etc. So let's go back to that chart on this. So this is now at 1339. We highlighted to you on this very channel, all the YouTube still there, good, bad, and ugly, around the 1300 being a major key level. So what did you do? You had a channel climb here. It was looking a tad sketchy here. I admit to being a little, well, that looks like it's going to go down, and down indeed it did. But then it wound up tiny imperfect HVF. Actually, you can learn about that. Go to themarketsniper.com, book a call. But that is currently a run of that imperfect target at the moment. So I wouldn't charge in right now. You may get better opportunities. You've just had, in essence, a very nice little jog up. Now this is something I've got from the 1100s. We were engaged in the Korean one in the 1100s that we've been talking about it. This was your traditional entry breakouts that occurred here in your revisit. This was the 1300 level that I'll take you up to the bigger time frames just to remind you from whence we've come. On the monthly. There you go. The point we made of this 1300 is that you had not got above it since the last time you had a month close above it was in actual fact March of 09. March of 09. What are we today? 22. So you've got 13 years and 6 months virtually since you last closed above the 1300 level. And it was very much capturing localized highs as well, not the extreme highs, but localized highs as areas of resistance. You can see also a wick there. Remember, this is monthly, so they were big. You haven't been able to get there ever since. Of course, we get a nice rounded bottom. Who doesn't like a nice rounded bottom, my precious missus? Yes, indeed. Roundy, all the way up and up and up and up. That is what you got. And of course, you got your super spikes Asian crisis. And we have called and had this label in here for a while. I'll get it in shot in a minute for a Mark II Asian crisis. But this is going to be almost driven by the dollar dominance. So we have been on the dollar dominance trade for an extended period. We never gave it the name that it lives by, but we have been calling for it before that was even known to us. USD DOM and Asian debt crisis 22-23. That is my prediction. That has been like that for an extended period, and we can see 2,366 potentially as a percentage-based move on a macro scale. So this could be a super spike of great damage. Great damage. People go, what? That's ridiculous. It's a ridiculous number. You're talking about an FX call that was calling for runs to almost double. So we've been in since this break, 180s. So we've been in since the 1880s here, 1180s, on a minor little fractal that has since still been working its way up. It's worth the carry cost for me for the potential gain it may give, and it's going to be potentially very, very interesting as a trade. Indeed, yes sir, yes sir. So that is your update on the Korean won, above 1300, and more importantly, taking it up and onwards above 1300. So if we just have a look at that, this is quite momentous. And actually you're trading here, guys. You haven't had the full session. You're trading here, so you can't even see the candle that's holding at 1339. Now, as I've said, don't chase in. That's a little bit of a gap pop open. I think a little bit of twitchy fingers getting in. You may get a little bit of a pullback or respite. That could be intervention by the central bank. It could be people profit taking that don't have the same macro view as us. They don't have HVF method. Go and learn it. You're not learning it from YouTube, trust me. You're learning a few things. You won't know how to implement it. It's not just, I've got to just do a sidebar on this because we get a lot of this comments. I've just bought a GS 1250 to do a big tour. There's a legendary South African rider. South Africa wins most of the GS trophies on the world stage for riding them. There's one guy that does an unbelievable course. Some of the guys have done it. Now I can go get somebody who's recorded the voice of everything he teaches all those students. I ain't learning it till I'm on that bike doing the obstacles he makes me do in person and being faced and forced to learn it and go through it. You can watch videos, you can listen to whatever you like, but until you're implementing and doing it, first, you haven't got all the theory, and second of all, it's the implementation thereof and understanding it and projecting it forward. It's always easy in retrospect to say something's done X, Y, and Z. So there's nothing like doing, and there's no substitute. And most people that nickel and dime and think they're getting something on the cheap invariably get what they pay for, I'm afraid. And they incorrectly implement and then consider it to not work. Which would be like me saying the guy's course is garbage on riding the bikes, having not gone but just listened to his voicemail, a voice recording of everything he tells the riders that attend. Anyway, that's sidebar aside. 1339, very, very strong move up. Weight I would suggest wait if you're not already in. We're already in. You could already be in. You could already be in from 1170s, but you're not. But that's okay. You can still potentially make out like bandits, but there's only a couple of places, and you've got to go to our YouTube channel, dear peoples. Go to our YouTube channel. Here we go. Let's not do that one. Let's go the Market Sniper. Quite simple, and it's in the same notes below. We put it in there for you. We get countless, no matter how many times I talk about the Korean won, guys are going, oh, but I can't trade it. I can't trade it. You can. You absolutely can. You absolutely can. You go into the show more notes. You can trade the Korean won on the SimpleFX one. Not the SCM, they're not offering it on SCM, but they give 100x leverage on many of the other pairs. You could be short Euro Swiss franc there, which is another one of our key trades that keeps swimming. And there was a period where guys were going, it's not going down anymore. Is it still on? Is your trade still on? This is macro trading. If you haven't got patience, if you haven't got community, if you don't realize you're in for the long haul, you will ruin it. This is not about getting in and getting out all in the same day, same week. This is about getting the major financial event that will be huge and catastrophic, that you will absolutely know, and that's when the cash and the profits rain on you for these extreme rewards to short risk trading. We are reset traders. We are reset traders. And not only do we build wealth in reset market economics, we protect it. So the one you want is the SimpleFX link. There you go. Go click it and go and open your account. You can use USDC, you can use Bitcoin, you can use anything you want as collateral. My personal suggestion is you use USDC on account of the Bitcoin collateral being suspect. I expect it to go further down. Anyway, so enough about that. Let's go back to the charts. So what about the other guys that are part of the Asian complex? Well, we'll jump on to the other part of the USD Korean won, by the way, is that we're also deeply concerned for the equity markets that are associated with these. So you've had a little bit of a rally in the Kospi, but you've just had a major inverted. Now, the last time I showed you this, you had the just-in-time entry. You could have put the Kospi short, and you would have overperformed to target if you knew and were able to do overperformance analysis. You would have probably exited somewhere down here. You would have had a very high reward to risk. In the same way I've said you can also short the Hang Seng on the Hong Kong, because they're not holding the equity markets, they are trying to hold the FX markets. Currencies are the final weapon, but boy, when they go, if they hold them, then you get so much more. That's where the additional overperformance and the melt up comes in. So this is what you've got to bear in mind. So the Kospi, it's made its target, it's overperformed, now it's had a bit of a rally, now it's looking soft, it's going to wind up and go again. And just on the small sell-off here, look how much the Korean won currency is being made to slip. And this is just the beginning, in my opinion. The scale of these moves you have not seen. And I've done this chart, and I'm not going to show it every single time. These are the sell-offs, and they're associated with the pumps on the USD Korean won. That's the dollar strength over the Korean. And you are in downside inverted after a blow-off pump. Guess what? Printing for the world, 7 trillion. Yes, you know who. That's right. And that had the effect of weakening the dollar for a while, and now they are short of their heroin. And each time they get given more, they need more just to feel normal, not to get high, just to feel normal. The dollar index from yesterday is up, or was it Friday? Let's say it's Monday today. 108.4, it's up and it's up and it keeps on going up, and we've given you targets for this. We have given you targets. How many times? We've been the most consistent, we've been the most stand to about dollar strength. We got this break of the channel. You know, my community, we were watching this not quite, and this defense here at this lower level, and we're getting back in. You could have been in it too. Look at this move up. What do you think this is? The euro is 3 zeros and 4. You're probably going to have a peg run today. You can't get 4 pips within the peg and not have someone push it over the edge for a while. That doesn't mean it stays there, but this time it won't have. This time, my friends, it won't have the rally. Remember the Euro Swiss franc. We warned you about this. This is the other components. This is the European side of the exact same trade. This is a dollar dominance game. This nation is in huge trouble. Lockdowns. lockdowns, grid downs, they'll probably have that too, but grid downs on energy. Imagine businesses that are big consumers having to stay down, having to stay offline. Mercedes can't build cars, BMW can't do this. That's going to be coming because of power. Can they put all those shutdowns on the citizens? They'll probably try initially, but wait for the political backlash and that. Then we got the USD JPY. The USD JPY. So here we come back to the USD JPY. Down, down, down. Very firm upward move back here. Now, it's not ready to, I don't think it just melts up and continues up. I think you're going to need some degree of letting go of what was a very big target made on a very big time frame. So there's going to be a bit of churn. So it doesn't, I don't think it's happening just yet, but you could have a little bit of this, a little bit of that, a little bit of squeezy Japanesey for the yen before you go up, up, up and away. So that could be the game. That could be the game. How long? I don't know. How broad? I don't know. But I think you wind up and you go higher. This was it. That was your pullback, roughly to the 131s and some change. And now you're back. Guess what? You're right back up top here at 136.8. That is what's pushing the Dixie back up so strong. So the Asians are starting, and when the euro was falling first and more, I said get your Asian trades on, they will come too, because the shortage of dollars in Euroland and the problems of Euroland are going to lead to a flight into dollar, and it's also going to lead to problems in Asia. So we're talking about those Asians. So the peg, let's talk about the peg. You never get your first attempt right on that squeezy. You can see it had to do one of two. I said it has to either spill down because it's been squeezing, or it's going to go up. This is going to be probably a setup as well. Much like the yen, you're probably rallying for that secondary high, and you go up, 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 and then over, a little bit down, and then up, 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 up again, and then who knows, then you get close up to here, and you could have a bigger version of that initial fractal that I gave you. One of them drops, my friend. One of them drops, and the time will be, that's when it will be, and it could be ugly. And they're going to continue to say, it's central to what we do, it's central to what we do, until they walk. I've been through this before. You're talking to the Mr. Preg break caller of the Euro Swiss franc, not once but twice, and that is the game. So all I do is, no worries, I'm not going away. You can keep on knocking, but I will be let in, and that will come in, and it will come in when the time is right, and things are in a bad way. So the key message is the Korean won is at a localized high. That is a very strong move. Take off all my scribbles. There you go. There she goes. There she goes. That is a kick out, friends. That is a kick out after a very moderate pause. We expect a pause after a broadening structure like that on a bull pole. You don't learn this anywhere else, friends. There is no theory on broadening structures. We expect it. We call it squaring up. You got squaring up. What did you then get? You go. This is telling you it's a very strong market. It's a very, very strong market for the dollar. This USD Korean won. I stunned the guys at Real Vision, telling them that I'm expecting a near doubler from the level that I entered at around 1200s, and that even at the time when we were doing it, when it was around 1250 going on 1300s, that you could get close to around 85% still on that particular trade. So there you go. That's your FX moves. I mean, the FX markets are your new crypto markets, and let me tell you, this dollar dominance is going to hurt crypto. It's going to hurt crypto, no matter what they say, and it suits their central bank digital currency dreams. Indeed. I would argue you're almost at the same level of momentum. You had a real strong 2 candles there, but you're already in a move here that is starting to replicate the strength there. And then, of course, there was that move there that was nice and juicy. You're getting a lot of surges, and you're not making that money. And don't ask me where to trade it. I've shown you. It's in the link. Click below. We appreciate you using our link. It doesn't cost you anything. And you know, you're part of the community of YouTube. Then that will potentially be in this trade and making out like gangbusters. Okay, that's it. Remember, you can be in a learning environment where you practice what you do in a controlled environment with regular webinars, with regular media updates from me, which from voicemails to videos, chart shares, plus all the recorded content on how to do everything properly with the theory, covering all the aspects of our theory, including theory you can't learn anywhere else because it's self-originated, which is everything to do with HVF method, everything to do with complex head and shoulders, everything to do with broadening structures, everything to do with how to use key levels of significance, basing ascending grind lines and capping ascending grind lines, descending grind lines. Grind line analysis is 100% ours. You just look, you're not going to get it anywhere else, and you can't implement it correctly if you haven't learned it properly. And you want that confidence. Why are you waiting? Why are you waiting when there are rainmaker trades in terrible times, when so many are going to be smashed into poverty, friends? This is Bolshevik communism. This is reset times. You need to build wealth in reset times. You need to protect it. You need to be able to buy yourself options. Anyway, I'll leave you with that beautiful image of that Korean won almost extending into a mega rising wedge, and you can't be assured that it breaks down as a rising wedge. It could in fact do a melt up. It depends how we go with the federal criminals at the Chief Satan Central. Okay, catch you another time. Thanks for watching, and yeah, play safe, enjoy the week ahead. Bye for now.